This stock market is a bubble. It looks almost exactly like the dot-com bubble. Let's look back to 1999 to what people were saying at the time. Here are some common phrases. This time is different. Valuations don't matter anymore. It's about market share, not profits. The opportunity is too big to miss. We're just getting started. This was 1999. At the time, computers, the internet, it was huge. And something very important is that we still obviously use computers and the internet today. It is still huge. All the way 2026, we still use it. However, the NASDAQ still proceeded to crash almost 80% after the dot-com bubble burst. And that was just a mild recession. Why did it go down that much? Because the prices were too high. Valuations do matter. That time was not different. And today, this time is not different. Valuations do matter. I'm betting big on a market crash. I don't recommend that you do this, but I am. You guys will be in my comments getting your feelings hurt. I'm just calling it like it is. I see that there's a bubble and I'm betting against it. Yes, I've been very early, painfully early. It boggles my mind that it still hasn't crashed. But I have learned a lot. Holding a massive bleeding position for years will do that. So you guys are in my comments. You guys don't think about the prices, the fundamentals. They are actually important. You just keep saying the Fed is going to keep printing money. Inflation. Inflation is not new, and we still have these booms and busts. Inflation is super old, actually. Today's bubble is arguably bigger than the dot-com bubble and the housing bubble of 2007. The dot-com bubble was very concentrated, but today I think we're more broadly overpriced. You look at the Shiller PE ratio. Shiller PE ratio is second to the dot-com bubble, but the Buffett indicator, a more broad view, is higher than the dot-com bubble. It's actually all-time highs, or near there. Valuations do matter. The PE ratios, the multiples, they do matter. They may not matter for daily price movements, but over the long term, they do matter. All things that can't last forever will end. And really, I cannot wait for it to happen. It's unfortunate that it has to happen this way, but the problem is the bubble being there in the first place. It's built on artificial stimulus and it has to pop. I just see that it's up there and it's going to pop. I might as well make some money from it. And then the real money is after the crash, buying stocks at a huge discount. I think about it all the time. Like, I don't think you guys understand how much I think about this. I think the market could easily crash 60%. I get my short position to stop bleeding and maybe profit, and I turn around and buy stocks at a huge discount. How much more beautiful can it get than that? Right now, I feel like I am doing the opposite of almost everybody else. The masses, they're going this way, and I'm going this way. It's been feeling like that for years. It may seem like I'm wrong, but the way I see it is I just haven't yet been proven right. And you may say a broken clock is right twice a day. But if the market crashes as much as I think it will, then I won't seem like I'm even that early. My belief that this market will crash has very little to do with geopolitics, with what's going on with the Iran war, with oil prices. That's just extra. 2008, we saw a big spike in oil prices. And today, we're seeing a spike in oil prices. Market crashed pretty soon after that 2008 oil price spike. I'm not saying that's what's going to cause this. It's going to happen anyway. Whether or not oil prices spike, it has to happen. It's not because of some president doing this or that. The writing has been on the wall. All things that can't last forever will end.